Hello everyone, today is Monday, March 2nd. It's 9 p.m., it's about 5 p.m. Eastern Time, and I've been wanting to make this video for a long time. I'm going to cover a lot of things here, so I don't know how long the video is going to be, but I want to cover some really great methods on how to know where the market is headed and how to deal with volatility, tools that we have or that are in any charting platform that you can look at that will help you navigate the markets. First is a chart showing the Fib Grid and the range grid on the bottom, which you can see very visually when it's gold or brown like this. That means it's hit its daily range. But here, where the black dots are on the 27th, this is 24-hour session here, but the market moved in 24 hours. I'm talking about the Nasdaq, 2,358 ticks. Now, going back a week, the average range was 485 ticks, just in the middle of February. So that's 5 times its average range. And then today, volume was really huge. I want to hear this in the comments. How many of you, when the markets change, that you're even aware of it? How many of you look at your daily charts and look at volume and look at the range of the markets, meaning how far the market moves from high to low? How many of you look at your daily charts to get an idea of what's going on? And how many of you are aware of how many ticks are traded in the Nasdaq versus the E-mini S&P versus the Dow E-mini? Here's a daily chart of the Nasdaq showing the volatility, showing the market top just 6 or 7 days ago, and then the sell-off we just had, and then today was a humongous rebound day. On the bottom here is the daily volume. Remember, this is a daily chart, so this says 1340K, but it's 3 zeros after that, so it's 1,340,000 shares. The average volume is indicated by this line, and this is 14 days average volume, so roughly 2 weeks. So the average volume is really 500 to 600K, and that's being liberal. It's more like probably 400K, 400,000 contracts. In the Nasdaq is the average amount of contracts traded, so absolutely huge volume here. And then the size of these bars, what happens on your Super Renko 6 charts or 500 tick charts is they become really small time frames because you have this furiously fast trading market with the increase in volume and the increase in distances moved. So this is a good trader is an aware trader, that you're aware of these things and you can make adjustments to your profit targets and your trailing stops if you choose to trade. I'm not at all saying don't trade in these markets. There's fantastic opportunity because the market moves larger distances faster, and it's really difficult to trade manually because prices jump around so much, but with the Autotrader, it can handle it. Now, by contrast, here's your daily chart of the E-mini S&P. How many of you are aware that the average volume in the E-mini S&P is more like 1 million, or between 1 million and 1.5 million contracts traded daily? Yesterday, the number of contracts traded was, this is 4,000K. That's 4 million contracts. Okay, that's almost 3 times as much as the Nasdaq, and as a rule, the E-mini S&P trades 2.5 times to 3 times more contracts than the Nasdaq. And you can see the daily range up here is once again about 3 times higher. What's interesting to note here is that the E-mini S&P and the Dow reached their 200-day moving averages 2 days before the Nasdaq did. So what that says to me is that the Nasdaq is leading the market. The Nasdaq is the strongest market of the three. that it took longer, and that the bounce that occurred only occurred after the Nasdaq hit its 200-day moving average. Here's a daily chart of the Dow, and the average number of contracts traded in the Dow is between 100 and 200,000 contracts, which is the least of the futures contracts. I've never really cared for the Dow that much, just don't care for the way it moves or the volume, and this is a pretty good visual example of that. And so you can see the contracts traded here in the Dow, not as much as the E-mini S&P, and the Dow hit its 200-day moving average first, and 3 days earlier than the Nasdaq, and a day earlier than the E-mini S&P. So back to our 30-minute chart. This is the day and the night session, and this is showing the volume profile, our volume profile, and these dotted lines here, this is the high of the value area, this is the point of control, which is where the most volume occurred for this day. This is the 27th, I believe, and then the low of the value area for the 27th. And so the value area is where 70% of the volume was traded for the session. And these levels by themselves can be very good zones to trade for. The market will note these levels. For example, if I draw a trend line over from the point of control here, note the resistance here in the night session, and then the support at the high of the value area from yesterday, right here. This is the high of the value area. And then the market traded through this level up to the high of the value area from 2 days ago, and then back to the point of control here. And actually this tail was down to the low of the value area from 3 days ago, and then late in the day it rallied into the close and then broke right through this. And then so where did it go? Well, the low of the value area from 4 days ago. Now what's interesting is when I show you the Fib Grid, you're going to see that these numbers are right on the mark from a Fibonacci and mathematical perspective. But the highs and lows of the value area going back a few sessions are very valid levels that the market is going to respect. So if we just drew these levels across, these are all areas of interest, and the market will respect these levels. Now, you've heard me say in the past that another easy way to draw support and resistance is at areas of high volume, or where you can see that price has had resistance, like here, and then there was support here, for example, okay? And then again right here we had support, 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 and then resistance, okay? So you can go back as far as you like, and you can draw your levels just like that. But a much more awesome way to do it is with the Fib Grid. Now what the Fib Grid does is, for this chart I'm using the weekly Fib Grid on a 30-minute chart. So here's your opening price for the week for the Nasdaq was 85.10.75 approximately, and it was also the point of control for the night session. And these levels here represent the daily range of the Nasdaq. So 100% of the daily range of the Nasdaq is from the open 85.10 to 87.16 would be 215 ticks. Now remember, it's the average daily range for the amount of days that I'm looking back. So on this chart, I'm looking back 120 days. Normally, I only go like 30 days. It's more accurate, but this is fine because the accuracy here is just fantastic. So you can see that the first level of resistance was 100% of the average range over the last, whatever the average range for the last 4 months was 250 points. Well, actually, let's see here. It was 85.11 to, let's just say 87.11 to, yeah, 800 ticks. So that's pretty high, actually. So 800 ticks was this first level of resistance, and then 150% of the range was up here, and then the weekly 200% is up here. Okay, now let's go back. Remember, this is a 24-hour chart. So if we go back to the previous week, the Fib Grid always resets and realigns. This is the beginning of the week. I drew, I have the session markers here. So this was, you can tell where the Fib Grid began, where the shaded area here begins. So this was the beginning of the week of the 24th. Okay, so market was selling off, so notice the first level down was the weekly 100%, and you can see here where it found some support. There was some overshoot. You can see the tails there, and then it broke through that and briefly stopped at the 150 and traded between the 150 and the 200 extension of the daily range here, quite a while into the night session. And then in the night session it sold off, and where did it go? Within a few ticks of 250% of the range. You can see the tail here. And so between 150 and 250% of the range was a zone, and it traded up to where 75% of the range was the high, but it kind of traded between the zone 150 and 75. You can see the support and resistance here pretty clearly. So this was in the day session here, and then it sold off, and where did it find support? Back down to the 250% extension of the range. And as we go into the week, it hit 300% of the range and beyond when the market made its low. So I would have to go back further to find confluence here, and believe me, it's there, but from quite a long time ago. Anyway, the market traded back up, and where did it find its first kind of resistance? Right here at this 300% of the range. And then finally today, where we had some rally here, you can see how the levels act. But if I go all the way back on the chart, say to the beginning of November, okay, so this is where the first week started. Let's look at 100% of the range extension would be here. I'm just going to draw the levels at 150 in the open, 50 to the upside, and 100 to the upside, or anywhere there's confluence. So this is 100% weekly here. I think it'll be easier to show the Fib Grid accuracy on a 5-minute chart. Believe me, it's great on the weekly chart when you apply the same principles. But here in a 5-minute chart, I'm only showing the regular session. And so okay, on the 5-minute chart, here is your opening range right here. This is just the daily session. So notice first couple of bars traded down to the 50% support, then down to the 75% level, back up to the 50% on the upside, found resistance at 100% of the range, this chart's only going back 31 days. So resistance here at 100% of the range, and traded between 50% of the range and 100% of the range, and then finally came up and traded to 200% of the range on the numbers. Let's go back another day. Okay, here's your open down here. Okay, here's 200% of the range, 300% of the range. What did the market do? Right up to 100% of the range, right here. Back to the open, then back up to 50% of the range right here, resistance. Pulled back to 25% of the range here, and then back up to 100% of the range, blew right through there. Resistance at 200%, support at 100%, and then not quite to the 200% zone, which in Jim's methodology, if they can't make it to the zone or through, then they're going to take it back down, and that's exactly what they did here. So these are your zones for today: 25, 50, 75, 100 below, and then 25, 50, 75, 100 above. Okay? So certainly you can make this bigger. I'm going to let me just make the range grid smaller here. I'm going to drag this down, give us a little more viewing area. Let's go back another day here. Okay. Okay, here is your open here. I'm going to take out the volume profile so we can see this a little better. Okay, so here's our open range. It traded down. Remember, you got to come over to the session here and it'll line up for this day. So here's the Fib Grid for this day. Here's the 100% level in red. So first it traded up to the 50% level, first couple of bars, and then down to 100% of the range, then back up to 50% of the range. And you can see the levels here, you know, basically the zones, you know, trading between the zones. This is a trend line I had drawn from something else. On the weekly chart, it's less, there's less zones. If you want to get a tighter look for the day, you go to your daily chart. But on the weekly chart, on the daily chart, you go, if you use the weekly Fib Grid, then you have the zones for the whole week. It's a little bit more spread out than than looking at it on a 5-minute chart. Okay, so here would be a whole week look. This chart is kind of small. It's kind of hard for me to show all of this effectively. But on the weekly chart, a little easier to see, and your levels are a little bit larger. So here's the open. This is the 25th. So here's the weekly 50% zone, and then the weekly 100% traded, found support at 150, traded back up to the 50% zone, and then back down to 150. Here's the next day. So we're still in this weekly zone here. So here we traded down to the 300% extension. That's as far as it goes. I don't have beyond 300. And then up to the 200. And you know what you could do is just see how many ticks are between these levels, It's almost 100 ticks. So if you drew the next zone, it would be down here, right about here, and so forth. So this was getting into the market low. And then, you know, now that we're in the new week here, this is the new Fib Grid. So now we have 300 extending all the way down to 79.38 and up to 91.87. But no matter what day you want to look at, I'll just go to a random day here. Let's take this day right here. Okay, so this was January 27th. We opened up on a Monday, went right to the 50% level. Actually, this was Sunday, so the 28th. I think this was might have been a short day. Let's take the 28th here. Okay, the 28th opened up. We'd already moved 50% of the range for the week, so we opened at the 50% level, traded up all the way to the 150% extension, and that's where it found resistance very clearly and had support at the 100% of the range level. You can see it right here very clearly. Support, resistance, and this is a zone from here to here. And then down to the 50% level. This is another zone. Notice it didn't make it all the way down to the 50%, and it went up even higher, and then traded back down to this zone and broke through this zone. Now this took several days. Remember, this is Monday, Tuesday, Wednesday, Thursday, Friday. And then here's a new week. So this is February 3rd. What did it do? Big rally right up to 75% of its range and traded sideways, and then a gap up. And here on the next day, it traded between 150% and 200% of its range, probably like the 225. And then it gapped up to 300% of its range here. But look how the 200% level had support. So all in all, the Fib Grid is just fantastic to know levels where the market is going to find support and resistance on any given day. And if you go down to a 5-minute chart, you have a clear, pretty clear roadmap for the day. Again, if I just went to a random day here, this is back before volatility picked up, and so here it found resistance at just 25% of the range, broke through that, and finally made it up to 50% of the range by 2 o'clock in the day, and failed there 50% of the range and came back to 25% of the range. Anyway, if you want to know more about this and how it works, I'll be happy to make another video. Please let me know.